this commentary covering AU and GJ this week. Been some pretty significant movements on both, so there should be plenty to cover. I haven't traded any of these, so I don't know if I'll have any. I don't have any like trade recaps or anything for these guys, but I'll try to find a trade and see if we can make something happen. I probably won't do the bar replay stuff I did last time, because I do want to keep this kind of short and sweet. But yeah, so I don't have much to start off with. Everybody's been smashing it. There's been a ton of new people in the Discord lately, so welcome. Hope you're enjoying the content so far. For all the people that have been here for a long time and watching these commentaries and get nuggets from them, I hope you get something from this one as well. I hope some of you guys actually trade some of these pairs. I know a lot of people just trade EU, but GU, GJ, AU, they provide quite a bit. So if one pair is ranging on the 15 and it looks like it's just wicks and there's not good structure or anything like that, these pairs are good to look at too. But anyway, I'm gonna get into it. We're gonna start off with AU. We're gonna start off on the monthly time frame. So one thing you'll notice about the monthly time frame is that overall we've been pretty bearish in terms of what we've done. Somewhat, I wouldn't say recently, but this was back in March, right? This is our COVID spike, took out this low here, and then we started to see price push and break some of these structural zones to the upside. Now what we've kind of come into is you kind of come into this supply zone here, right? I'll mark this up and we'll refine this down, right? So we've come into the supply zone and we've started to push down. Now one of the things that we can say here is that we came into this as a demand zone, right? You can see we wicked right into it. This is why price pushed off of this level. We came into this. Normally what I would do is I'd just cover this whole kind of area and justify this reaction more or less, right? So here price came in and we more or less got a chalk to the upside, right? Very obviously this is the monthly, so take that with a grain of salt, but price took this low here and then it proceeded to take this high up here, and then we got nice bullish price action for a couple years, right? About 2.5 years, 3 years almost. So price pushed up, right? And then we started to push into the downside because it looked like what price actually came into was potentially a bit of a supply chain. Now, one thing with supply chains is they often start off with fairly what I would call like nondescript supply zones, or in the reverse demand chains, demand zones. So here we have some like buy to sell wicks, right? On the monthly, whatever, it's just buy to sell wicks. We know what buy to sell wicks are. They're typically interactions with previous demand zones where price hesitated to break that demand zone and then pulled back and then ultimately ended up breaking that zone. Now what price does when it comes to a supply zone is often what it'll do is it'll come into these nondescript areas. So we kind of have this wick here that would have been a good opportunity to get short, but because this was our catalyst for the supply zone, what we now have is price coming into this to kind of continue that supply zone here. Now obviously we'd have to refine it a little bit. I imagine we could get it a little bit tighter, but for now I'll just cover this wick. All right, so here there's a pretty obvious supply chain happening. We have the catalyst, we have the initial entry, price pushes back in, a little bit of confirmation, and then ultimately price comes and takes that low out, right? So that is currently where price has come into now. We've pushed into this monthly supply zone and we started to push to the downside. Now one thing to keep in mind is that this here and this wick could just be seen as a sweep of this liquidity. Now we've taken this low and we've pushed this high here. We've taken out basically all of this internal range liquidity, right? All these highs were just internal range liquidity. Some of them gave pullbacks either in the supply zone itself or after taking it out. Either way, just a pullback is what we kind of saw, and then price continued higher. Now there's a couple ways that this can play out. One, we could see all of this is internal range liquidity and price could just continue to the downside, play into this wick. Something there might happen or might just continue lower. The other possibility is that we have now come into a pretty significant monthly demand zone, right? And we got this huge wick to the downside, and we'll cover that wick right there as well, right? And we pushed up, right? We took out this high, and now I think if we went on to lower time frame, what we're starting to see is we're starting to see a shift in structure, right? Now, I'm pretty sure Aaron covered this on his recap video to an extent, showing that there was bullish intention in AU. So we'll kind of break that down and see what's going on. Now, again, in terms of the monthly, that's what we got. Let's go to the weekly. All right, again, here's that kind of reaction to the monthly zone, right? Now on the weekly, you'd have something down here. Price clearly doesn't make it to it, right? So you might be wondering, like, well, why did price just set up here and go? Well, because it was a monthly zone, right? Which is why top-down analysis is important. So again, what we'll do is we'll just refine this a little bit. All right, we got that. That's pretty much how it was. This, I'll just include this, check that out. That's the initial reaction. We'll take this here. It's probably more so this candle. Now I would choose this candle because this candle takes out that high right there. So that's what I'd be using that for here, right? You can see that price takes out this high, right? Just by a hair. It actually comes in, let's actually see. It does take out that high as well, right? So in terms of internal, external range liquidity, you kind of have this range here where that's the low, that's the high. Price ended up taking out the high, which was our external range liquidity, and that was the ultimate catalyst for price pulling to the downside, right? So drag that back over. This will mark out as a sweep, that high right there, right? Now, once price took out the high, it dropped to the downside, right? And this leaves us a nice, clean weekly POI, right? Because it's an unmitigated sweep of liquidity. We currently took out that low there, which on the monthly we know is a giant wick. On the weekly, we got some body closures, right? So now prices hit this, and again, when it comes to structure, right, we have this here high. This is a slight pullback, nothing great. It's not quite like this, right? But you can see it as a pause, you can see it as a pullback. On the daily, there's probably more structure, but in terms of expectational order flow, right, we're bullish. Breaking highs, the expectation is for highs to continue to break and the lows to remain intact. Now, this is our monthly demand zone. This is our low. At the moment, price is still holding it, right? And what you can see is that price came into the refined weekly demand zone, right? And we got pretty significant bullish price action. Now, where we're at right now, price is pulling back into the low of this, where this high went. So there's potential for price to trade higher from this level. So it'd be good to look for that positioning here. Now, again, we're basing this based on the fact that it's coming into a monthly demand zone, which is very significant. So weekly as well, we're fine. So let's go to the daily and look at a little bit more recent price action and see what's going on. Now what we can see is that price didn't quite make it all the way down to the daily refined demand zone. So I'm going to mark it up just so we have it. And what price did come into seems to be whatever's happening in this wick right here. My guess is that this is a reaction to the supply zone. So it's more of a higher time frame flip, right, within this wick. Right? So it doesn't mean that price won't come into this extreme demand zone. It's just, it's possible that from this level it may continue to go. But regardless, this is a valid level. These essentially saying that demand is still in control on a much higher time frame until this low goes. It could be wicked and used as liquidity. That's always a possibility. But ultimately, unless price closes below it and continues bearish structure, for now, it may be good to look for long positions. Now this here, this is back in August, right? So keep that in mind. And here it's more of October and September timeframe within this range. So we'll look at that in a second. I won't break down this previous price action. I've done it in previous commentaries, but what you'll see is we hit that weekly supply zone, part of that much larger supply chain. and then price started to push to the downside, right? Here was our first indication that price wanted to trade lower on this time frame, on the daily. You could in theory say that this was our first indication, because this here is a sell candle within a bullish structure. So you could say on the lower time frame, there's probably some kind of chalk in this, and then price trades up into, you guessed it, these buy to sell wicks right here. Actually wicks it just a little bit. That could mean there was no sweep of liquidity here, so it came to sweep that. But anyway, that's something that you should inspect, right? Go back and study it and see what happened here. It's worth checking out. This could just be used as external range liquidity as well, right? This being the range, right? You could say that this was your range, this is your high, this is your low, excuse me, and that price came out, took out this high external range liquidity, and then price dropped to the downside, right? Ultimately, what we've got going on now is we've got a fulfillment of internal range liquidity. All of these lows here are starting to go. Now, I imagine if we went out to the 15-minute, I would say that the majority of the lows are probably session lows. Let's take a look. If we have this data. Come on. Okay, we'll start at the bottom here. You have to bear with me. I hope you can see this, but here, right? Asia low, a little faint red. Let me turn this up so you guys can actually see this. Right. This is how important internal range liquidity is. A lot of this stuff ends up being very... Wow, this is way too dark. That's okay. It'll help see. Right? If you notice all these lows within the range itself, right? This is all, again, this is all internal. What? Sorry, 1 second. Right, all of these lows in here are just internal range liquidity. If we look at this, let's kind of squeeze it out, right? All these lows are internal range liquidity, right? Every blue one is Asia, every green one is London, every red one is New York, right? So as price starts to find its way back down, what it's doing is it's targeting these lows, and these lows are session lows, and these sessions hold a lot of liquidity, right? Here, London low, right? New York low. What did Asia do? Asia took out the New York low and then built a new low, right? A lot of liquidity here. These lows were all taken out by this guy here, right? Asia low, London low, New York, Asia, right? Part of that trend, whatever. New York low, all these got taken out. Doesn't matter though. Asia low, London low, New York low, Asia low, London low, New York low, right? You can see they were all taken out. But what you'll notice is if we squeeze these out, we just focus on the lows, like the structural lows, right? When we zoom in, we'll notice that a lot of them are session lows, lots of liquidity, right? And this is what you need to do when you're studying price action, trying to understand why certain things are happening. Why are these levels targeted? It's because there's liquidity beneath the sessions themselves, right? Again, here, Asia low, right? We have London low, it's still intact. We have this New York low is still intact as well. Here, New York low. Right here we have New York low. It took out London low, so that's the one that's available for liquidity, right? And what we'll do is, how about this? We'll drag these across. Right, here's another New York low. We'll just see how price interacted with these levels after the fact. All right, there again, London low. Oops. Here, there's another good low, right? This is London low, right? So again, a lot of times these lows are created within the session. They are the low of the day or the high of the day, right? These are things that you want to take care of and understand. Now, what you'll notice is that I'll go back to the 1 hour, close out this. And I don't have them all selected, but I have a good chunk of them selected, right? as price came into these levels, we'll kind of see what price did after the fact, right? Now, we got a little bit high in the leg here, but that's okay. All right, what you'll notice is that price came in at respected level, but ultimately, when it took it out, it came up, gave us a pullback, continued short. Here again, this low, right? It was respected for a little bit, but I imagine it was used as liquidity, right? Again, here, what happened after price took out this session low, right? This structural low, took it out and pulled back, huge pullback, right? Here's another low. What happened to this one? Right here, takes it out. When does it pull back? Right after it takes out the session low, right? So on and so forth. This one, not as significant. Price just blows through it. Here, this one, again, price rips through it. This is a very tight range, but ultimately, once it took out all these levels, tapped into this demand here, pulls back, right? And then again, here's some session lows. So the idea is that with these lows, these previous session lows, they're all targeted. They're all used for liquidity. Often you'll get deep pullbacks after price takes it out. Sometimes you won't. But regardless, when you're looking at internal range liquidity, understand that these are previous session lows and understand that price might come and take them out. So I think we were on the daily, right? Let's look at the daily again. Now, one thing that we have here is we have this more extreme demand zone on the daily, right? But one thing to keep in mind is that when we have imbalance on both the bearish side and the bullish side, one of the better things that you can do is you can use this entire sell candle as your POI. Now, obviously, it's a huge level, especially coming from the daily, but we'll refine down and try to look at what's happening there. But when you have, again, this kind of, I typically call it a window of imbalance, right? It doesn't necessarily have to be something that you trade or something that you're aware of, but when it comes down to it, you want to understand that it's there. If you look at even this previous price action, what do we have here? There's slight imbalance between this wick, that wick, and this wick. So what do we have? A window of imbalance. What does price do? When it came back in, it came to tap the window. It didn't come to tap into this demand. It came above this wick, or maybe right into this wick, but it tapped into this window. Again, why? Because there's imbalance on both the bullish and the bearish side. Now, this isn't something that is like set in stone. It's not, it's just an observation. It's just something worth taking a look at and understanding. The easiest thing to do and the best thing to do is just simply use this entire sell candle or this entire buy candle as a POI when you have that kind of window of imbalance, and see how you can play it from there, right? It's typically in this formation. It's usually that kind of V-shaped form, right? So from here, what we can see is what? We have this being taken out. Now this could just be seen as liquidity, right? Because what we have here is we have demand, right? While supply was in control, price came in, reacted off this demand. It kind of failed to break it for a little bit. Eventually it broke it, telling us that supply was in control. When price hit the monthly, price pushed up pretty aggressively, right? And it took out this level right here. Now the question is this just liquidity? And is it just being used as liquidity? Sorry, yeah, if it's just being used as liquidity. Now it could be seen as a structural high, as this is the one that went and broke the level. However, this is more of a pause than a pullback. So the real question is, where's my leg? Is it this potentially? Is it this here, right? Now this is where subjectivity comes into some of these markups. Now what I like to do is I'll just go to the weekly or the time frame that's one higher or something like that and try to clean it up. So now I have this, right? This is my leg. Everything in between is whatever, right? This is my leg. So technically I'm between a high and a low with bullish price action, right? So that's how I'd kind of look at it, clean it up, right? Daily, pause, uses liquidity, potentially prices come down. It's coming off this monthly. And now, again, we're starting to push to the upside. So let's go to the 4 hour, kind of see what's going on here. Right, so what did price do? Now, in terms of the 4 hour, price hasn't come into anything too significant down there. What does the daily say again? It's just that window of imbalance, go figure. Alright, so we'll just mark this up. Again, there's not enough data behind this to say use this to trade from, but I'm just going to mark it up so we're kind of aware of what price reacted from. 4 hour. Now if we map this guy out, right, kind of look at, we want to see what price came into here, so we need to inspect this. What it looks like it's doing is coming off a little slightly lower time frame flip zone. Looks like we had some supply here. Clean that up. Alright, so now I want to look at this. Go to the 15. See what's happening. Turn this off. Right, so here we have, again, this was demand. Right, demand reaction while supply was in control. Price pushed up. We ended up getting a, this is the initial reaction. Price tapped into this inside bar here and was the catalyst for price pushing lower, right? So here, I think if we refine this guy to this candle, as it's kind of the last unmitigated level of this supply chain, right? And we can look to the left to see what it's potentially tapped into again to kind of fulfill that supply chain, right? And here, kind of a nondescript again, wick. Took out that high right there, right? So we know that there's a sweep of liquidity somewhere within that level. Again, super nondescript. I wouldn't really pick that out of my butt and just be like, I'm going to trade from that. But we can use it to justify the supply chain. And we can say, okay, price gave us one little doji candle, one sell candle, and then it pushed to the upside. This is what price came into, this candle right here. Now, again, it is a valid flip zone. This is a valid supply. There's flip zones down here, I'm sure. Whether or not this would be something that I would pick just to trade from is like highly debatable. I don't think I would, but it makes sense when you break it down, right? You can justify it. So we know price came into that, and then price started to push to the upside from there, right? So in the current price action, as we see it now, we've had, again, more demand reactions while supply has been in control. Ultimately, price pushed down to the downside, mitigated that kind of nondescript flip zone, right? And then what I'll do is I'll just mark this. All right, so price coming to that, gave us that reaction. Ultimately, price came into this flip zone right here, had a nice reaction to the downside, but zero follow through, and then price just started pushing to the upside. Now, when it comes to, again, supply chains, what you'll notice is we have here, we have a bit of demand, right? Price, instead of just blowing through it, reacted to it and pushed up to the upside, right? And it looks like we mitigated some buy to sell wicks right here. Supply, 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 right? One final reaction, and then something on the lower time frame because this is a huge candle, right? Supply chain, right? Price came into this extreme level and gave us pretty significant pushes to the downside every time, except for now, this one, right? Now price is pushed to the upside. So not only have we hit the monthly and we started to give that bullish price action from here, and we took out this high, right? We're also failing to hold the supply chain. Price is failing to break to the downside, right? Now, in my last commentary, I said, watch out for this level right here. I think that was somewhere in this, right? Or price hadn't come to this level yet. All right, as far as I remember, I would have been on Sunday, which was, last Sunday was the 3rd, right? So here, the 4th, right? So I indicated that price would be coming into this level here. I wanted to see price hit this and then drop. Now, from an intraday perspective, it did pretty well, but as we can see, it had not enough follow through. If we go to the 15 minute, right, what ended up happening here was price came into the level, right? We get a nice chalk to the downside, right? You can see price push the high, and then it took the low, right? So now we have a nice bearish confirmation chalk, right? Price pushed up into the wick, but ultimately the supply zone itself was still intact, the very high of it, right? And then price tapped into that and then dropped. Now it gave a really strong trade. I'm pretty sure Aaron got into this. I took this one on the 15-minute zone here. Right, it was a pretty large candle, to be fair, but I took it from here. Let me draw this as such. Right now in the US, I traded with a Wanda. Not the best spreads. I'm pretty sure this. Yeah, I can't remember what the spreads were at the time, but they're not great. Like, even if you look at this, like, this is just like, this is not great data. This is whatever, but it says 8. Obviously the markets are closed, but typically it's like somewhere between 2.5 and like 4 pips sometimes. Like, it really fluctuates. So because we don't have the best brokers in the US and we have poor spreads, like, there are ways to get better spreads if you trade high volume, that kind of stuff, but most of you guys probably aren't doing that. So what I usually recommend is just take the 15-minute POI. If you can refine it to something lower, like in this case here, that there's large wicks on both sides of this, I guarantee you can go to the 5-minute or something like that and find a better POI. Let's just do that so we see. Right. So make this a little bit cleaner. Drag that back. Right here again, right? 15-minute EQ. Right, 15-minute EQ, nice 5-minute inside bar just above this level. Price is relatively efficient. We don't have any weird windows of imbalance to worry about, anything like that, right? So this is also in the premium of the range of the 15 minutes. So it's also, it's also a good idea to just take the POI in the premium itself, right? Again, just because of those wicks, you can do that, right? So here, you could take it from this, right? You get a nice 5 pip stop loss, and then what I would do is target probably the 15-minute lows, right? Just right here, right? Price comes into it, nice 9R trade, right? Or 10R almost. Can't really complain about that. If you took the EQ of the 5-minute, you'd be doing much better. But again, you know, let's be realistic here. The way I traded this was the 15-minute EQ. There. Right, and one thing everybody has to remember is that once your capital is high enough, you don't need to be hitting 1-minute trades left and right, right? A lot of people hit 1-minute trades because they're trying to build capital still, right? High RR is really important when your capital is on the low side. It's obviously great when your capital is much higher and that kind of stuff as well, but it's also not necessary after a certain point. The ultimate goal here is longevity, right? And the best way to do that is to trade from higher time frame POIs. I personally believe that trading from a 15-minute EQ level is probably one of the best ways to remain consistent. I know Albert's going to do a video on it sooner than later, and when it does come out, it's going to be a banger. But you know, a lot of people who have to work don't have time to trade London. They don't necessarily like New York, but they're up at night and they see a nice 15-minute POI before in Asia that, you know, maybe London might tap into. You set a limit on the EQ and just go to bed, wake up in profit or potentially a loss. You know, it's not that big of a deal, right? As long as we're limiting how much we're trading and you know, picking high probability setups, right? Again, like this, we're in that supply chain. We chalked 15 minutes to the downside. We have this nice candle right here, this nice POI to trade from. You know, why not throw 15 on it and take the risk? Right? We know from the higher time frame that even though we got that nice monthly bullish push to the upside, there's still a lot of reason to trade it short. Now, ultimately, we end up finding out that price is starting to push to the upside, and we don't quite have the luxury of really trading it short anymore. But at the same time, you know, it was worth the risk. You could have pulled 10R off of it easily, right? No problem. So let's go diet supply. I feel like I always say I'm going to make a short one, then I start rambling and stuff. But anyway, yeah, so here, this. Looks like price came into this guy. Right, makes sense. This is a valid demand zone. Takes out these lows. We'll equal lows right here, right? You got some liquidity, right? You can see that ultimately gets taken out, right? And now that it's taken out, price tapped back into it after coming off the supply. Now, again, this is valid supply. We've also chalked to the upside, right? Price came off of this level and it came down. Now, it wasn't a break of structure, but it's definitely a chalk. And again, for a lot of people who wonder like the difference between a supply zone and a chalk, or not a supply zone, but a chalk and a boss, you know, you need to learn structure, right? You need to understand what a structure high and low is, right? You can't just say that, you know, well, it took out this high, so it bossed to the upside. Not quite. This for me is the high. This is the low. This is your range. This is our first point of supply that has failed. So that's our first indication that price might want to trade higher. It doesn't mean that the structure is now bullish. All that means is that we've chalked to the upside, right? This confirmation into this level, demand holding and then pushing this high, this indicates that price wants to trade the upside because now structure itself is bullish, right? So it's really important to understand the difference between a chalk and a boss, right? A chalk could be a boss, right? A chalk could be just a failure of supply and demand, right? It doesn't necessarily mean that the structure itself has shifted, right? It's just kind of an aggressive way to more or less notice an early trend change, right? So just keep that in mind. All right, so yeah, so 4 hour currently bullish. We're coming off the monthly demand zone with a decent reaction to the upside. We have weekly demand zone refined. Again, this is chalked to the upside now, so there's a lot of reason for price to trade higher. Daily, or we haven't quite come into the extreme yet, right? So there is the possibility for price to trade lower into this and then continue higher. We have the 4 hour as well. Price is now coming to this 4 hour sweep zone here, indicating that there's a good chance that price will want to trade higher from this level, right? You know, another good way to look at it is that this supply zone gave reaction, right? And if supply was in control, then why didn't it follow through, right? So now that it's looking like demand is in control, why did the supply give a reaction? To build liquidity. Price push, took out the upside, tapped into the supply zone, it ended up respecting this demand zone, right? And now price is pushed into the upside. So now what I want to see is I want to see what happens next, right? Now another way you could look at it is this. In this level here, again, you had more supply because what you can see is price came down, it pushed up, and it failed to break the high. So what happens? Where's the liquidity? That's the liquidity. This was our indication that demand is now in control. Price took out this level as liquidity. So again, supply has failed. So now what I'd like to see is more of the same. I want to see a little bit more reaction from supply, maybe build some liquidity here, and find itself into maybe this previous sweep or maybe into this demand chain, right? So right now, my POI for this is still a valid POI. It hasn't quite tapped into it very far. However, I also have this. I'll be aware of this. If price comes into this, I'll want to long that as well if it sets up on the lower time frame, right? And we'll just continue higher. And we'll see if price can continue this bullish order flow to fill this internal. That's gone. That's gone. This is gone. That's intact, right? All this is internal range liquidity now, right? And then here we have external range liquidity and some valid supply along the way. So we'll see what price does on AU, but that is my outlook. GJ, real quick, we'll get into. I probably won't go into as much detail. I feel like I've said that before though. So, okay. GJ, what's happening here? All right, a lot of bullish intention in this more recent price action. Clearly, we've been overall a bit bearish, right? So let's see, monthly demand. Very nice, right? Prices come into this. Started to push to the upside. Looks like what we had here was a monthly flip zone. Right, there's your demand. Here's your supply. Now again here, right? I'm picking this PY because why? It takes out this high right there, right? Sweep of liquidity, and then demand fails, price continues lower. Now, price is failing to drop below the low. Now, it makes a lot of sense that this is happening because if we look at this, we've had a monthly kind of chalk here, right? We took that low, and we've taken this high. Obviously, this is the structural high, whatever. There's been supply failures in terms of the internal range liquidity along this bearish leg, but now we've come into the extreme. We've pushed up, we've come back down, and it looks like, let's just check. We just barely took out that low, right? So now we have a little sweep, of course. We have a little sweep of that liquidity, and then this external range liquidity was taken out, right? Because again, we have, that's the extreme, that's the extreme, this is the external range liquidity, this is the external range liquidity, everything in between is internal range liquidity, right? It's just filling these voids, these Doritos, right? So now price has come, taking out this external range liquidity, and it exploded to the upside, right? So that's our monthly. Price is still kind of reacting within this zone here. It looks like it's coming off of this kind of supply chain level. I'll cover that wick as well. All right, so price still remaining potentially bearish, but it seems doubtful. It looks like price is running pretty high right now. So let's look at the weekly. All right, we'll find this up. Got that guy. Looks like there's a huge level. That wick came into there, so it looks like price is actually come into this wick. That's a really big wick. Whatever, right? Supply chain, right? Again, little nondescript inside bar right here, right? Just the catalyst to start off our supply chain. It looks like, right? You could say that many did that. This came into this. Oops. Right, supply chain all the way down here, price again coming into this high right there. This high gets taken out, comes into whatever's happening here. Now one thing that we need to note here is that as price came into the supply zone, it looks like it's failed to take out this low. Now I know we wicked it, right? We took out a little bit of liquidity, but in reality what it looks like it did was it just tapped into this. Right, so it used this as inducement, so we got a little sweep of liquidity, and then price tapped into this previous unmitigated sweep of liquidity, and then it started to push the upside. Now we need to look on the lower time frame because price is definitely stuck in a little bit of a range. We took this high, failed to take the low. Technically we're still bullish, right? The supply zone has failed to yield lower price at the moment. So let's go to the daily. Right, here again, there's that daily. Looks like that wick there. Right, so excuse me, price came down from the supply zone. We got our initial chalk here, right? This takes the high, that takes the low. Right, and then from there, price pulled back, traded into this supply zone. Right, and dropped from there. Now, I think I've gone over a lot of this before, so I won't go too in depth, but basically, demand reaction while supply is in control builds liquidity. It'll sweep liquidity right there. There's that wick, right? So price could be coming into that, to be honest. Price used the rest of this candle as a catalyst for price pulling back here a little bit. Have to go to the lower time frame to refine a little bit more, see what's going on. But I will kind of actually mark this wick out so I have it aware of when price comes into. You'll set an alert right there. All right, we'll kind of see what price is doing. This wick right here, taking out that low, does indicate that price may want to trade lower. We haven't really had too much of a supply failure quite yet, because what we have is we have demand, right? Demand failing, right? This low gets taken out, that gets swept. This low gets wicked, right? Just wicked by a hair, not by too much, 15 pips or so. You have equal highs right here as well. We got available liquidity to the upside that price could be targeting at the moment. Price is coming off of this demand zone. All right. Let's take a look at the 4 hour. Uh, 4 hour, not much to refine. I guess you could say that this wick right here is a sweep, right? That actually gets swept itself right there, right? And then price pushed up to the upside. Swept this low, mitigated something in here, and then went to the upside. Died. And then price took out this low again. And then popped up, right? So this here indicating, this indicates to me that potentially the supply is technically still in control. These lows kept going, using as external range liquidity. The issue here is that it's just holding within this demand zone, right? It's basically within this range right here, this high and this low. So until it really breaks out of there, it's hard to say exactly where it's going. We're definitely sideways bound right now. In terms of more recent price action, we had some pretty nice shorts we had a nice push chalk to the downside right here. Price came into this supply zone. Right. This supply zone here, did price come into it? Nope. Look at this. If we look at what price came into, what do we notice about price? See how there's a wick here, and then the next wick is right there, right? Meaning what? There's imbalance here and a balance here. Window of imbalance. It shoots right through it. It always does this for some reason. I don't know why. I can't tell you. But that's why price came off this level right here. It failed to tap any of these POIs, which means that these POIs are still valid, right? They still may get reaction, so we need to be cautious as price approaches it. But this reaction right here simply took out this high. It mitigated this window of imbalance and then dropped to the downside. So, you know, again, I think I've said it before in other commentaries, but it's worth looking into. It's not something completely sure yet, tried and true. So just keep that in mind. More recently, prices come into this 4 hour demand level right here, right? So we have the sell candle, right, which gets swept. I believe this is a supply flip zone. Right. Price comes in, supply, reaction, right? There's no sweep of liquidity, so price gets swept, right? And we'll notice is that price comes into, it looks like the low of this inside bar, or maybe it's just this candle right here. This one. This is our last kind of valid sweep of liquidity. If we look at this, right, because price pushes up from the wick inside bar, which means there's a range, right? Inside bar is a range. Price comes down, sweeps that low, pushes to the upside. This is higher than this candle, that's higher than that candle, this is higher than that candle, or equal to. This is higher than that candle, this is higher, this is equal to that candle, right? So there hasn't been any sweep within this, right? This is our valid flip zone, our reaction to this supply. Our sell candle, there's no sweep, it gets swept, right? That's how you choose decisional versus extreme. A lot of times, if there's no sweep in the flip itself, it gets swept. Price comes into this extreme, obviously pushes to the upside. We get a nice reaction to this 4 hour supply here, right? But ultimately, price just reacts to this 4 hour demand, and instead of committing and taking out this low or taking out this low, price respects this demand zone and pushes to the upside. So at this moment, we're currently bullish, right? And from an intraday perspective, we have valid POIs from this valid supply chain, right? Now my charts aren't normally this messy, so bear with me. I'll definitely be going back in to clean a lot of this up. This drives me nuts. Drag this all the way back. Right, but we have valid supply chain here, right? Unmitigated level of liquidity. This here is again demand reaction while supply is in control, builds liquidity. Demand fails, price pushes up. It fails to tap into the zone itself, so this is available. So now what we'll do is we'll wait to see what happens as price approaches this level. If there's any longs up into this level or potentially beyond, we can be aware of that and go from there. In terms of 15-minute POIs, you know, price came into this here, which is pretty nice. I don't know if it came into this extreme. I think it's just, again, that kind of sell candle, right? V-shaped recovery, just use a sell candle. All right, price pushed up. Here again, it kind of mitigated these demand zones over and over again. All right, and then price pushed up again here. Right, here was our break of structure to the upside, right? This was also our reaction to supply, right? Again, if demand's in control, why is supply giving a reaction? It's to build liquidity. So here, that takes out the low, pushes up, right? There's multiple wicks in here that sweep liquidity and mitigate itself over and over again, right? And then price taps back into it, pushes to the upside. So here, we're in a much higher time frame supply zone, but we have price reacting to this. Now, there's equal lows right here, relatively speaking, right? So there's potential for this to sweep this low and then continue to the upside. There is a nice little sell candle right here. Doji could be the start of a demand chain. If price comes into something like this and starts to kind of build bullish substructure, then it's potentially worth getting long in. So again, as of right now, we're pretty stiff in this sideways range here. We haven't really had too much clear indication that price does want to trade lower. All we really have is this wick right here. Now, if we look at like GU, for example, on the 4 hour, right? What it reminds me of this price action right here. We hit a higher time frame supply zone, and price started to wick the lows, right? It started to just wick the lows, just a little bit by little bit, right? And ultimately, supply just started holding, and demand started failing, and then eventually we got this, right? So keep that in mind. It doesn't mean it's going to happen. However, that being said, there is indication that we may be getting similar price action as price kind of builds out liquidity through this level. So as price approaches these extremes, just be ready to potentially short it. If we start taking out these lows, like here, like these are just internal range liquidity, that means the majority of this is probably going to go, which is a bit insane. So, you know, do your best. If there's something that sets up here, this is probably the best possible price you can get in. And if it does set up and it runs, you know, just when you're making a couple $100, just buy me a steak dinner sometimes. All right, I'm gonna run. I hope everybody got some value out of this, and it feels okay about my outlook on AU and GU or GJ at the moment. For now, yeah, just keep studying and keep working hard, and I will catch you guys this week. Oh, and don't forget, Monday is a U.S. holiday, so, you know, trade how you will, but I assume New York will be a little bit slow, so keep that in mind. All right, take care, guys.